So, welcome to today's deep dive. We are getting into something really, I think, genuinely mind-bending today.
Oh, absolutely. It's a complete paradigm shift.
Yeah, totally. So, for everyone listening, I want you to imagine you are standing in front of this massive, imposing, like centuries-old stone fortress.
Right.
And for generations, if you wanted to do business, if you wanted to build literally anything of value, you had to go through the main gate of this fortress.
And pay the toll.
Exactly. The guards at the gate charged this hefty, unavoidable toll. But then overnight, some strange magic happens. The massive stone walls they just evaporate into thin air.
Just completely gone.
Gone. It is just a wide open field now.
But the wild part is the guards are still standing there.
Yeah.
Like they are standing at the exact spot where the gate used to be, just holding out their hands, demanding you pay the toll to pass.
And getting highly offended if you just decide to, walk around them.
Right.
Because it's an empty field now. Well, that empty field is the modern digital economy. And today, we are looking at a really raw, unfiltered manifesto written by a solo tech founder. It's the creator of a startup called VeriLink.
Yeah, and the document itself has such a great title.
It does. It's titled, "The Gates Are Open and Nobody Told the Gatekeepers." So, okay, let's unpack this because the core thesis here is just deeply disruptive.
It really is.
The author argues that artificial intelligence hasn't just introduced some convenient new software tool. It has fundamentally altered the economics of building a business.
Completely rewritten the rules.
Right. The mission of our deep dive today is to explore how this shift has basically handed the means of production back to the individual. And in the process, it is threatening to just completely collapse the modern middleman economy.
Yeah, I mean, we are talking about a structural earthquake and how value is created, and maybe more importantly, who actually gets to capture that value.
Right. Who keeps the money?
Exactly. And the source material is so fascinating because it is written by someone who is, in the trenches right now. They are feeling those tectonic plates shift under their own feet.
Yeah, they aren't just theorizing.
Right. And they start right off the bat by pointing out this massive paradox in the market. The cost of building real products has basically collapsed.
Right. Let's talk about how that collapse actually happens mechanically.
Yeah.
Because, just a couple of years ago, if you wanted to build a functioning software platform,
You needed a whole team.
yes, big team, you needed a front-end developer for the interface, a back-end engineer to build out the database, maybe a DevOps specialist just to manage the cloud servers.
And you needed, 6 months of runway just to build a basic prototype?
At least 6 months.
Yeah.
But now we have these large language models that can digest incredibly complex technical documentation in, seconds.
Yeah, it's wild.
So a single founder can literally sit down,
Yeah.
ask an AI to generate the foundational code, spot a syntax error in real time, and then have the AI write the deployment scripts.
So one highly focused person is now acting as the conductor for an entire digital orchestra.
Exactly. And basic logic would dictate that if a task gets dramatically cheaper and faster to perform, well, the price of outsourcing that task should plummet.
What's fascinating here is that the exact opposite is happening.
Right. It makes no sense.
When the cost of production approaches zero, the market price should logically follow suit. But the author points out that developer services, lead generation firms, marketing agencies, these intermediaries are charging the exact same amount.
Oh, sometimes even more.
Right, even more. And they used to justify their massive premium rates by pointing at the sheer complexity of the work.
Right. They would say, well, building this infrastructure is incredibly difficult, so you have to pay us a premium.
But that complexity is gone, or at least it's heavily mitigated. The market can automate a huge portion of this work now.
Which exposes a deeply, deeply uncomfortable truth about those old prices.
Oh, definitely.
They were never actually tied to the intrinsic value of the work. They were tied entirely to scarcity.
Yep.
Back in the day, if you didn't know how to code or set up a secure server or, run a complex lead gen campaign, you were just locked out.
The agency had the keys.
Exactly. They were charging you for the lock, not just the labor. The scarcity was the actual product they were selling.
And now that AI has completely stripped that scarcity away, charging a premium is no longer selling a service. It is exacting a toll.
You are the guard standing in the empty field?
You are the guard in the field.
But wait, if the tools are literally sitting on our laptops right now and the wall is entirely gone, why on earth are people still paying these tolls?
Yeah.
Isn't basic supply and demand broken here?
Well, institutional inertia and, honestly, the illusion of safety play a massive role there.
The illusion of safety. How so?
For a lot of legacy companies, paying a premium agency is essentially a way of outsourcing blame if things go terribly wrong.
Oh, wow. Yeah.
Right. If you hire a massive, wildly expensive firm and the project fails, you just blame the firm. You don't get fired. But if you do it yourself and fail, it is entirely on you.
That makes total sense.
But the author isn't really focused on legacy corporations who can afford to burn cash on that illusion of safety. They are focused on who is getting crushed by this broken model today.
Right. And understanding that these prices are just arbitrary tolls leads us to look at the modern solo founder.
Yeah.
Picture this. You have a solo founder who has leveraged AI to build a finished product all by themselves. They have sweat equity, they have a working platform, but they have zero revenue yet.
Which is a tough spot to be in.
It's brutal. The author argues this founder is standing on the single riskiest ground in the entire business world. They have put everything on the line.
Yep.
But when they go to the market looking for just a little bit of help, maybe a service provider will help scale or an agency to handle distribution, the provider demands full payment upfront.
They demand the toll before you can pass the gate, and they absorb absolutely zero downside.
None.
The person with the absolute least room for failure, which is the solo founder, is being asked to carry all the risk.
It's crazy.
Meanwhile, the established provider, the one with actual resources and a safety net, flat out refuses to put their own skin in the game. The author basically says that when an agency uses a spreadsheet that tells them to, quote, hold the line, unquote, on legacy pricing, it results in a lose-lose. The provider loses the deal and the founder loses the help.
Right.
This isn't a business partnership. It is literally one business simply dumping its risk onto another.
So what does this all mean? Let's break it down. It is like going to a bank for a small business loan, but the bank demands half of your future revenue up front out of your own pocket,
Yeah.
while flatly refusing to actually give you any capital if the business goes under. Or another way to look at it, it's like a farmer being asked for a cut of the harvest before they're even given seeds.
By someone who refuses to help water the crops.
Exactly. But let me play devil's advocate here for a second. Don't these service providers have to protect their own businesses?
Yeah.
They have payroll, rent, overhead. They can't just work for free and take on a total stranger's risk, right?
I mean, sure, they do have overhead. But that actually highlights exactly why the middleman model is fundamentally incompatible with this new AI-driven reality.
How so?
The middleman requires a steady, guaranteed extraction of capital just to justify their own existence. In the old world, the founder had to pay them because the middleman controlled the tools.
The founder had zero leverage.
Zero. But today, the founder can just walk away and ask an AI to help them build their own distribution channel or run their own marketing campaign.
Right.
The provider's refusal to share risk made perfect business sense when they held a total monopoly on execution. Now that they don't, refusing to share risk just makes them obsolete.
Wow. Yeah, that's a huge shift. And the author explains how founders can bypass these risk-averse middlemen by taking us on this, honestly, just a brilliant historical detour.
Oh, this part is so good.
It's my favorite part. They argue we aren't moving into some uncharted, terrifying new era. We're actually reverting to a much older, more natural way of working.
They call it the cottage economy.
The cottage economy.
Yeah.
So before the massive smoke-filled factories of the Industrial Revolution, families spun wool and wove cloth inside their own homes.
Right.
They owned the raw materials, they did the hard labor themselves, and most importantly, they kept what they made.
Right.
There wasn't a floor manager taking a massive slice of the profit.
And there was no middle layer deciding who even got permission to participate.
Exactly. But industrialization completely shattered that reality. It pulled all the raw materials, the heavy machinery, and the labor into these centralized buildings owned by wealthy capitalists.
Right. Skill became entirely separated from the person who possessed it.
Yes.
Like, even if you were the best weaver in the world, it didn't matter unless you were granted access to the factory loom.
You had to be let in the gate.
Exactly. And if we connect this to the bigger picture, that centralization birthed a permanent class of intermediaries. Managers, agencies, distributors, entire careers built solely on standing between the maker and the market.
And that arrangement held strong for 2 full centuries. But AI is quietly and rapidly ending it. And here's where it gets really interesting. The author uses this incredibly poetic metaphor to describe the shift.
Yeah, the cotton and the loom.
Yes, they write that we are walking back into a cottage economy, except, quote, The cotton is code, the loom is a laptop, and the workshop is a browser tab. End quote.
It's a perfect analogy.
The inputs are cheap again, the tools are shared globally, the output belongs entirely to the builder.
But I do have to ask you, is this really a grand historical reversion to a cottage economy, or is this just a highly romanticized view of being a freelancer with ChatGPT?
That's a great question, but there's a vital distinction between the two.
Okay, what is it?
A freelancer in the modern gig economy is still, fundamentally, selling their time to a centralized platform or larger corporation. They do not own the underlying asset they are building.
Ah, right. They don't own the factory. Exactly. What the author describes with the digital loom and the browser tab is absolute ownership of the final product. One single person can now design, code, deploy, market, and collect payment for a global software platform without ever asking a corporation for permission.
And without giving away equity to a gatekeeper.
Exactly. That is the true definition of the cottage economy. It is about absolute sovereignty over what you build. The middleman model only thrived because physical gatekeeping was necessary.
Because you literally couldn't fit a multi-ton factory loom in your living room.
Right. But AI distributes the factory to everyone's living room.
It's wild to think about it that way. So if the laptop is the new loom and the middleman model is facing collapse, why are the old intermediaries fighting so hard to keep their imaginary factory gates closed?
Yeah.
Like, why not just adapt their pricing and work with these new solo founders? The author argues it actually comes down to deep, messy human psychology.
It always does, doesn't it?
Always. Specifically, ego and fear.
Two of the most powerful forces in business, and yet they never show up on a balance sheet.
Never.
These gatekeepers built their agencies and their service firms back when building technology was agonizingly hard. Over time, they basically convinced themselves that the struggle itself was the value.
Right.
So admitting that AI has leveled the playing field means looking in the mirror and admitting your massive advantage wasn't pure genius. It was just the fact that you held the keys to the gate.
And that is a devastating blow to the ego. The sunk cost fallacy is psychological just as much as it is financial. They suffered to build their moat, so they believe everyone else needs to suffer too.
Exactly.
The ego says, quote, I earned mine the hard way, grinding for years, so you should have to grind and pay my premium invoice too.
And if you have ever tried to hire an established agency to build like a simple website or an app recently, you have probably seen this exact spreadsheet logic in action.
Oh, 100%.
They quote you a price from 2010 for work that takes a fraction of the time today.
Yeah, just disconnected from reality.
Right.
And then fear backs up that ego. The fear says, if I actually lower my prices and help this solo founder cheaply, they're going to leverage these new AI tools and move so fast they will outgrow me in a month and cut me loose.
So they just freeze.
They freeze.
Yeah.
They keep charging legacy prices and demanding payment at the door.
But the author offers a radically different alternative to this freeze. They call it the true founder economy.
Right, the alternative.
Yeah. Instead of the old model where you extract cash up front, founders are helping founders create value before anyone gets taxed. They are trading things that cost them nothing but have immense high value to the other person.
So two builders find an overlap.
Exactly. Instead of writing a check, they trade free software licenses, or one does a live demo to their audience for the other. Or they trade an honest, glowing testimonial that the provider can use to go win 10 more clients.
Value gets created on both sides of the table before a single invoice even exists. The author actually calls this the smartest deal in the room.
It is the barter system of the digital cottage.
Okay, but practically speaking, if trading testimonials and free licenses is the smartest deal in the room, how does anyone actually pay their rent or buy groceries in this new founder economy?
Yeah.
Because my landlord definitely doesn't accept software licenses.
Oh, for sure. And the author isn't suggesting some permanent, moneyless utopia here.
Right.
They are talking about surviving the critical early stages of momentum. When you are at absolute zero, cash is your most precious, scarce resource. By trading licenses, code, or testimonials, you are bootstrapping trust and utility without burning your runway.
I see. You're building the engine out of shared parts.
Exactly. And once the engine is running and the product actually reaches the market, the cash follows.
Yeah.
The providers who demand cash before the engine is even built are, as the author brilliantly puts it, racing a clock.
Yeah.
Standing at an open door demanding a fee isn't power anymore. It's just theater. And the audience is already walking past them.
The audience is already walking past them. That is such a powerful image. And, the question of how to pay the rent while you're building that engine brings us completely out of the realm of theory and straight into the author's lived reality.
Yes, let's talk about the actual product.
Right, because they aren't just writing manifestos on the internet. They're actually building a company to prove this exact point. The startup is called VeriLink. Let's look at what this one person built, because the technical scope is honestly just staggering.
It really is.
VeriLink is a passwordless authentication platform. And for anyone listening who isn't, deep in the weeds of cybersecurity, authentication is incredibly complex to get right.
Totally. The author built OIDC and OAuth2 compatibility with signed tokens.
Right, which is essentially the complex digital plumbing that allows you to safely click, log in with Google or log in with Apple on a new website without ever exposing your actual password to that specific app.
Yeah, that alone is huge. But they also built device-bound, IP-restricted magic links.
Right, meaning instead of remembering a password, you get an email link.
Yeah.
But that link is cryptographically tied to the specific physical phone or laptop you requested it from.
Exactly. You can't just forward it to a hacker.
Yep.
And a hacker can't intercept it and use it on their own machine.
It's super secure. And they also built a full developer portal with API key management, metered cloud billing, and web application firewall hardening.
Which is massive.
Yeah. Think of the firewall as a highly trained bouncer standing at the door of the server, constantly checking IDs and turning away malicious traffic before it even gets close to the sensitive data. They built the entire full stack front to back, all by themselves.
It's wild. Just a few short years ago, if you wanted to build a product with that kind of massive surface area, especially enterprise-grade security and identity management, you would have needed a fully funded team.
Oh, without a doubt.
You would need a front-end developer, a back-end engineer, a security specialist, DevOps, a product manager.
You would have needed a seed round of at least $1 million and a very long runway just to get to a beta version.
Yeah.
But this founder did it solo from their digital cottage.
Right.
And the way they are pricing it is a direct rebellion against the gatekeepers.
Yeah, the pricing model is so intentional.
It is live right now
Yeah.
in the design partner stage, and they're pricing it fairly at just a nickel per user per month. There's a free tier built in, specifically so small teams aren't punished with massive fees just for being early.
Right.
And here is the absolute kicker. While they are single-handedly building this enterprise-grade security platform by night, the founder is working a service industry bridge job by day to pay the bills.
Wow.
They are out there waiting tables or making coffee just to keep the lights on so they don't have to take predatory capital or pay the toll keepers.
That is the ultimate proof of their thesis right there.
Huh.
They are literally living the exact dynamic they are describing. They know exactly what it is like to have zero surplus revenue but still need to push a complex product forward.
Yes. And they also have a background in enterprise security sales. So they used to be on the other side of the table.
Right.
Does having a background inside the theater of enterprise sales make this founder the absolute perfect person to dismantle that exact same model?
Oh, it absolutely gives them X-ray vision.
Yeah.
Having been in enterprise sales, they know exactly how the vendor extraction model operates from the inside out. They know that a massive chunk of enterprise pricing is pure theater.
Just totally made up.
It is based on perceived scarcity and artificial gates, not the actual cost of delivery. Their motivation to build VeriLink isn't coming from a place of, bitter resentment because they couldn't get a job in tech.
Right.
It is coming from a profound internal validation. They have a crystal clear sightline of a structural shift in the global economy, and they possess the new AI skills to exploit it. They are dismantling the theater because they used to read the scripts.
They can see the matrix.
Exactly.
What an incredible journey we've gone on today. To summarize this deep dive, we are watching the real-time shift from the centralized industrial middleman economy into a new hyper-empowered digital cottage economy.
It's happening right now.
The gates that used to lock founders out, whether this is your cost of writing code, the cost of distribution, or the complexity of server infrastructure, those gates have been blown wide open by AI. And yet the toll keepers are still standing there, demanding their cut.
It is a massive transition period. The solo founders who are moving fast are winning because they just aren't waiting for permission anymore.
Which brings us right back to, listening to this right now, whether you are building a tech product, managing a budget inside a larger company, or just navigating your own career trajectory, you have to look around and ask yourself, where are you still paying tolls for gates that no longer exist?
Yeah, that's the real question.
Where are you assuming something is impossible or too expensive, simply because that is how it worked 5 years ago? The source material leaves us with this incredible quote: "Ego protects the past. Humility builds what comes next."
That's a great quote. And, if I can leave you with one final, slightly provocative thread to pull on something that builds on this founder's vision of the future.
Oh, definitely. Let's hear it.
Let's say this digital cottage economy fully materializes. AI empowers everyone to become an independent builder, completely sovereign over their own work.
Okay, yeah.
What happens when millions of these solo creators suddenly realize they are all entirely dependent on just 2 or 3 massive AI models, the digital looms, if you will, owned by mega corporations?
Oh, well, all right.
Right. Will these solo founders eventually need to unionize or form modern digital guilds to negotiate pricing and access with the AI platforms themselves?
That is wild to think about.
Are we watching the collapse of the old gatekeepers, only to pave the way for a brand new, infinitely more powerful type of digital gatekeepers?
Will the fortress walls just rebuild themselves out of code instead of stone? That is a haunting and brilliant question to end on. The field might be wide open today, but you always have to keep your eyes on the horizon to see who is trying to build the next toll booth. Thank you for joining us on this deep dive. Keep building, keep questioning the gates, and we will see you next time.